Welcome, everybody. My name is Jeff Green. I'm going to be your host today for the June 2021 housing market update. Thanks for joining us. Let's jump right into our presentation that we have set up for you. We're going to get to our panel a little bit later. There's a sneak peek at who they are. But let's get right into inventory. It's the big story. It's what everybody's talking about. It's the big problem right now that is going on. This is an interesting look at it. You can look state by state, and you can see that the dark gray means that there is very, very low seller traffic, meaning new homes coming on the market in an already historically low inventory situation. There are no states identified as being very strong, none even as strong, the highest of which you see is stable, which is represented in the color that you see here in Florida, Pennsylvania, Illinois, California, so on and so forth. So not a whole lot shaken in terms of new listing traffic coming on. So it doesn't look like the burden is going to be eased anytime soon. Buyer traffic, on the other hand, is hot. Very strong in just about every state except for the lighter blue states that you see here. So there's a lot of buyers still looking to make that purchase. This just gives a look at appreciation and how much price has gone up. Now, these are year-over-year numbers. And if you just pause for a second and think about where things were in March of 2020, March, April, May area of 2020, that was the beginning of the pandemic and everything was kind of in flux as far as real estate goes. In fact, prices may have even declined in certain areas because literally there was a stop in terms of the ability for us realtors to operate, for attorneys to operate. So the whole thing kind of came to a screeching halt. So you're seeing massive increases because obviously the real estate market recovered nicely and actually just began its roaring boom. So now we're comparing this time, which is a complete boom, to last 12 months, which was almost a halt. And you're seeing some pretty big numbers here, well over 10%. So, obviously this is kind of an obvious statement, but I figured I'd put up here anyway. If inventory increases slowly, house prices will continue to rise rapidly. And if inventory increases sharply, house price will grow slowly, right? So we need inventory. That's the bottom line. That's the discussion point. Here's what the MBA, NAR, Fannie Mae, Zelman, and Freddie Mac are all projecting for home price forecasts inside of 2021. So when 21 finishes up, these organizations expect the average home price to increase by these percentages listed here. The average is 8.2. That, historically 4% is usually used as a benchmark for homes. Average price increase. So double the historical average is a pretty big deal. So a decline in single family permits indicates that builders are slowing construction. So this has been something that, we've spoken about now for a few months, which is builders' willingness to continue, home buyers' willingness to continue to pay these increases in the materials. And yes, we are starting to see a decline in single family permits, right? Building permits being taken from local building departments all around the country. So this problem of higher costs for building materials has certainly set in. I also wanted to give a quick date on the foreclosure side of things. It's always a talk. Everybody's, always asking me, well, what about foreclosures? Don't you think a lot of these people paying these prices for homes are ultimately going to get foreclosed on? Well, the fact of the matter is two things that are worth note. Number one, the total number of mortgages in forbearance have been dropping since June of 2020. And that trend continues. So on an overall basis, there are less forbearance instances than there were a year ago, let's say, all right? And that seems to continue to be going down. However, something that is of interest is that there have been about 1 million homeowners that continue to extend their forbearances, all right? So it seems like the people that were in trouble a year ago and got into forbearance are still in trouble and are still, taking advantage of that situation in one way, shape, or form. So, it seems as if there's this kind of shadow inventory of about 1 million homes that could eventually come back on as foreclosures at some point. But that's honestly, a drop in the bucket in terms of the amount of demand that there is right now. So I do not see the foreclosure angle at this point in time being a major influencer on the overall marketplace. So affordability. So now you have to start to say, okay, prices are rising. Mortgages are still good, but can people afford to pay these prices? Well, remarkably, as we stand today, it's still a very affordable situation as compared to years in the past. So for example, here's a time period from 85 to 2000, which was the percent of median income needed to purchase the median priced home, right? So how much of your income would you actually need to be able, to purchase that home? So back then it was 21%. In 2006, which was really the beginning, or I should say the peak of the last boom, or the beginning of the decline, but really truly the peak, it was 25.4%. And right now, today, we're at 14.4%, 11 points below 2006. So it's still not an affordability issue in a general sense. The other thing worth noting is rent. Rent is going up. And we're going to get to inflation in a little bit and how that's going to impact rent. But basically, it makes rent go up. So the reality is that in many places, it's sometimes cheaper to own than it is to rent. So that's just another positive force for the housing market in general, right? Because rents are just continuing to go up. And I mean, look at this incline in rent. And you have to ask yourself, if you're a long-term renter, does that really make sense? Probably not. And that's why, we spend a lot of time here on the Housing Market Update trying to encourage people to buy homes, right? Because it helps them. It's been one of the driving factors for the success of America in general and our middle class, is the fact that home ownership is widely available to many people. And that's a very good thing for wealth building for individuals. This is also important, which is understanding how many homes are either owned outright and there is no mortgage on it. But these are some numbers, some metrics that look at least 50% equity. Okay. Now, the increasing pricing has helped these numbers look stronger. But it also shows that, there's 31.9% of properties with equity rich, right? Like at least 51%. But check this out, 38% of all homes in America are owned free and clear. That's a huge percentage of the population of homes that do not have a mortgage on it. So that's a really solid thing. And those numbers historically have been pretty good, and they continue to be good. So that's a good thing. It shows that people aren't losing their minds, treating their homes like ATM machines like they did in the last downturn back in 2006. All right. So interest rates still historically low, although they are inching up. House prices have spiked. We don't expect them to fall, because from JP Morgan. And JP Morgan believes that they're more likely to keep rising. I agree with that. One thing that's important to say here is those who remember the housing bubble of 2006 and 7 may be nervous watching. But the previous bubble was fueled by speculative buying, which we do not think is the case today. And that is correct. It is not the case. In other words, what do they mean by speculative buying? Well, there were a lot of people buying homes on speculation, meaning they were buying them as an investment, hoping that they could flip them or sell them. And really what's happening now is these are primary residences. For the large majority of purchases that are happening is primary residences. Another thing that you are seeing is institutional purchasing of single family homes, but those are not individual investors who are taking major risk and just don't have the cash flow to to make the dips, the rips and the dips here. So it's a good point worth making and worth understanding, is that there is not a lot of individual speculative buying going on out there, not nearly as much as there was back in 2006 and 7. And America's choice of best long-term investment, people still believe in real estate as being their best investment, which is a good thing, right? Because to a certain extent, it's inflation proof. It helps guard your currency from inflation, owning real property. And it's still a great investment in most people's minds. That's a positive factor. So let's talk about inflation. Unless you live under a rock, you're starting to see headlines. These are just three that I picked up on that literally pinged my phone in the last week. Consumer prices surge 5% annually. That's the most since August of 2008. Stocks waffle as inflation jumps. Producer prices surge 6.6% annually, most on record. So inflation is here. We've been talking about this for a few months in the housing market update. And we're going to be talking more about it because it's a real thing. And it's, for the last 20 some odd years, there's been a lot of quantitative easing by the federal, the central banks around the world, not just here for the United States. And, as I've over the last 20 years talked to very smart people that I know and who are in my sphere, a lot of them have been very concerned about inflation and the impact of that on our currency and what that's going to happen. And as I've grown as a professional, I now understand much more about that and fiat currencies and how all that comes into play. But how does it impact the housing market? This is something that we're going to be taking a deeper look at as we go on through the housing market update in future months. But basically, these are the four key takeaways as I'm learning the ins and the outs of how inflation really is going to impact the housing market. I want to share this with everybody today, is that from the takeaways that I've gotten from my research are these four things. Building materials will increase. Hello, that's already happening, right? That's past tense. Cost of borrowing money will increase. We're going to talk with Jessica Imparato of Cardinal Financial today about rates and what's happening there. But at some point, the rates are just going to be pushed up. It's a fact. It will happen. Price of homes will increase. We've already seen that, right? And that's an initial thing. It doesn't necessarily mean that it's always going to be the case, because at some point things get out of control and then people can't afford to buy anymore. And then suddenly there's a downward spiral. But then the other factor is rents increasing, and that really becomes a strain on just everyday people, which is not a good thing. We want to always be looking after the middle class and lower income people to make sure that they're have a roof over their heads. So we're going to take a look as time goes on at these factors that impact the housing market related to inflation. So let's wrap it up here with just some stats. We show you these every month because it's good to have perspective. And I take a look at, the number of homes that are selling. This is, in my opinion, the most important leading indicator of what's happening with the housing market. And you can see the pink line in 2021 is up every single month over all of the other past 4 years. So those numbers are very strong. There are lots of transactions happening. So it will be interesting to see, although you can see the variance closing here a little bit. We'll see if it can match last year's numbers. I mean, these were really high numbers in the fall because there are cycles here in the real estate. It tends to pitter off in October, November, December, January, and it starts to pick back up again in February, and it usually peaks somewhere in the summertime. So we'll see if that normal seasonal fluctuation takes hold again. You can follow my red line here. I'm almost thinking that the line may be more like that. It might drop down below because there was so much pent up demand, right? This was the shutdown of last year that happened, and then boom, things took off and it stayed high through the fall. So I'm thinking my prediction is that we're going to see a line similar to what you're seeing here with my red. I think we're going to drop below 2020 when it comes to fall. Average home price is soaring. There's no doubt about that. Look at these variances. I mean, that is a huge gap right there. If you look at the previous 4 years, yes, price was increasing, but by a much more normal rate. But I mean, look at this increase. It's amazing. It's just like almost unheard of on a national basis. So it's been an interesting time for sure. And then this is really the story, right? And I think that this is the reason why it's safe to say that this real estate market is not necessarily a bubble. that's going to burst and just completely fall apart in a fast manner, right? Because it's truly a supply and demand situation. There is just not enough supply. There's not enough homes for all the buyers that are out there. And this graph really shows it. I mean, look at this variance here, and you can see how the pandemic impacted it, right? You know, it was fairly consistent for the previous years. Then the impact of the pandemic happened. And this comes back to my theory, which is, you know, I do believe at some point businesses are going to recall the employees back to the offices. And really what's happened here, and you can just see it in this chart, is that the pandemic hit and people wanted to get out of the tight metropolitan areas and out into the suburbs to have a little bit more space. And that's exactly why all the inventory went away, is because the cities are dense. There's more residential units in a square mile than there is out in the suburbs. And all of those people leaving those dense areas, the suburbs and the country just couldn't accommodate all the people that have, you know, built and moved into the urban centers. So the inventory just got wiped out, you know. But at some point, employers are going to call people back to work. I know that a lot of employers are adjusting how they're working, but at some point, you know, and I think the reality of why I feel strongly about that is because I watch the commercial real estate market and what's happening, and by and large, most office leases are still intact. The companies continue to pay. They're not looking to get out of them because they do see themselves reorganizing and getting those offices back again. And are people really going to want to make these long commutes? I say no. We live in a bedroom community of New York, and I can just tell you that the commute is brutal from where we are, and a lot of people just are not going to want to do it. So a lot of things to check in with the panel on. Before we get to our panel, let's just do some housekeeping. The next housing market update is going to be July 20th at noon. We always do these at noon. So you can stay informed at hmupdate.com and get a reminder email the day before it happens and a week before, all that good stuff. And a thank you to our sponsor, NewOp, the Business Opportunity Exchange. You can sign up at newop.com to track and exchange referrals with speed and ease. So without further ado, let's get to our panel. Jennifer DiCostanzo from Green Team New York Realty, Keren Gonen from Green Team New Jersey Realty, and Jessica Imparato from Cardinal Financial. Thanks for joining me, ladies. You can all unmute your mics at this point. I'm going to let you all kind of jump in with any comments that you have based upon the information that I've just given, but I'm going to start it out first with Keren and just touch base on the appraisal front. That's another thing I like to ask every month. How are appraisals going? Because that gives us kind of a view into the mind of the banks and what they're thinking, and whether they're reeling in the appraisers because they feel that the market is overheated and there's not much room to keep going up, and they want to kind of keep a lid on things as far as their mortgages go. So Keren, your mic is muted. Why don't you give us an update on appraisals and what's happening there? What's your sense?
So I have not encountered any issues until literally just this past month, where I've had two different buyers in two different markets that did have an issue with their appraisal. Luckily, we were able to work it out and still close the transaction. But it seems as if appraisers are being a bit more uptight than they were earlier in the year as far as accepting comps from agents or accommodating. So it seems like that loop of doing whatever it took is a little bit, more tight than it used to be.
Mm-hmm. Jen, would you agree with that?
I'm not seeing any backlash on appraisals. They're coming squarely right in on the number. And to be honest, a majority of the transactions, they've waived them all. So the appraisal contingency by far has been removed from a lot of the transactions. So it's just a formality that you need to go through, but I'm not getting, as that number comes back, there isn't any shortfall that needs to be made up because they are coming in at that number.
Yeah, I also read a report. I can't remember if it was NAR or another source of the information, but it was a legitimate source, and they were making the point that there are a massive amount of cash transactions happening because that's the only way that people can get the transaction, right? They're stacked up against other buyers, so they have to waive their mortgage contingency. So obviously, that is a non-issue with regards to appraisals, right? Because if you're buying it cash, you don't need an appraisal. No one needs to approve it for you to spend your own money to buy the house. So that'll be interesting to see how those are impacted. Are you seeing a lot of cash transactions, Jen? We'll go with you first and then Karen.
A lot. There's a lot of cash.
Yeah, and I mean, Karen, I'm assuming you're seeing the same thing.
Absolutely. My buyers normally miss out to the cash buyers. So yes, I'm seeing it time and time again. The one thing that I did notice on one of my listings, we did receive a cash offer. Obviously, we took it. It was better than most. But then they also pulled out in a very odd way, which I've never seen. It was literally the first day of attorney review. And they said, oh, we decided not to buy the house, which normally people don't do. So that was the first for me. And I'm definitely going to be cautious in the future and make sure that I discuss with the agent a bit more in depth, because I always do. But I need to make sure that those buyers that are offering cash really are ready and they're not just putting offers on multiple properties.
Yeah. Yeah, that's got to be an issue too. What about just the overall intensity, Jen? We were talking before we started the meeting, and Karen, you too. We'll start with Jen. Just the overall intensity. Are you seeing it cool off at least a little bit from where it was, a month ago, 2 months ago, or is it still intense, Jen?
There's definitely a change within the last 2 to 3 weeks, especially now. 2-3 weeks ago, as life is starting to resume and open up, there's definitely been a shift, which I think there isn't even a metric for it just yet, but you can just get the rumblings of what's happening. There's just an overwhelming amount of buyer fatigue. A lot of buyers are still sitting on the sidelines and they're just squirreling away their money because they're literally sitting on their hands. There's just nothing to go see or to buy. I will also tell you, in the last 2 weeks, I've had 3 transactions pull out because of commute reasons, that they're being called back into work. So that's definitely going to be on the rise of just, what you thought isn't necessarily going to be the end result of working or remotely, as much as you thought that you would be. But there's definitely buyer intensity. The market it's very low on the inventory, but starting to see some shifts. I'll be honest with you. Haven't seen price adjustments ever on just, the daily updates of MLS, and you're starting to see those, you reach high for the number, and now you're starting to see those numbers softly come down a little.
Back, be a little more realistic. Yeah.
There's definitely more buyer friendly conversations happening. So that's kind of, on the lower end of some rumbling there, but it's the buyers are in it and the sellers are in it. It's just we're in a new area as we open up to kind of see where we're going to be on the other side of it.
Right. Yeah. And I think, as far as the urban centers go around the country, and New York specifically, I mean, our cities are pretty awesome here in the United States. There's a lot of cultural things. There's a lot of reasons why they want to be here. And my experience of working in the New York, the northernly suburbs of New York for so many years is that, people come up here, they get taken by the beautiful nature and everything, but then they come up here and they're like, it's kind of boring. The clubs aren't open that late. There's Broadway's not here, and they kind of want to get back into the action. I do sense that that's going to happen again. I don't know why it wouldn't happen this time, So Karen, what about you? You were saying that intensity has not dropped off. Things are still moving and shaking. You're not seeing any difference.
For us, yeah, it's definitely on the Jersey side. We definitely have just as many buyers as we did before and still missing inventory. The one thing I am noticing is that the prices of the houses are stabilizing a bit, so they're not so outlandish as they were a few months ago. But there's definitely still a lot of buyers still looking. And like Jen said, there are a few that have taken the back seat and said, we'll just try again in a few months. And I do have other clients that said, we're just going to rent for a year and we'll buy when this all quiets down. So we have both sides of the border.
Okay, interesting. All right, so let's make a pivot over to Jessica here and talk about mortgages and rates and just the overall lending market in general. So I always like to try to end this within 30 minutes so that we can keep our fan base onto what they're doing. So Jessica, let's talk real quick about rates. You had a very good point before that you were looking back at some of your transactions from a year ago, and the rates were fairly similar to what they are now. Is that
Very
right?
similar. Yeah. And I looked ahead a couple of months. They didn't really start dropping significantly until I'd say like August, September. And I really feel like that was a gift. It was temporary. We never expected rates to last that long, being that low.
Right.
And I'm happy to see them back where they were a year ago and not higher.
Yeah.
Because there has been a lot of fluctuation with the market. There's been a lot of changes, obviously, with our government. So there's been a lot of new things happening where they could have really gone up pretty high. And they haven't. So we will hear more tomorrow after the Fed meets. They're going to announce whether they're going to buy more mortgage bonds or if they're going to be halting the purchases. And that will determine if rates are going to continue to rise or if they're going to kind of stay where they are. But I wouldn't necessarily expect them to drop back down into like the high twos again. I think that ship has sailed, and
Right.
I think, you know, the threes are going to be our new norm.
Yeah. So the takeaway, just to distill what Jessica just said, was, you know, basically where the rates are now is where they were before the pandemic kind of set in. And then there was this, you know, influx of stimulus that essentially brought rates down and gave this artificially low period of time, which has since passed. So when you look at rates on a month over month basis or a quarter over quarter basis, it looks as if rates are really on the rise, but the reality is they're just back to where we were before this whole thing started. So it's a much more normalized situation right now, I think is what we're trying to say. So that was good information that Jessica brought. Do you see, Jessica, any problems with appraisals?
I've had it go both ways. I think that the appraisals, I'm sorry, that came in a little under. The buyers were well aware that that was a possibility because they knew they were offering too much. So it wasn't really a surprise to anybody that didn't appraise. For the most part, most of my appraisals were coming in, you know, right on the money or 5,000 over within that range. I had just one come in yesterday for 60,000 over what they were paying. So there's really no exact science to it. If there's comps, they're going to appraise. And as you were mentioning earlier, with the amount of cash buyers and people waiving the appraisal contingency and spending the extra money where there wasn't comps a month ago, there might be those comps now. So although the appraisers are being a little tighter and a little more strict as their appraising goes, I think that it's fair to say that they're still being, you know, they still have comps to go off of. And I think we're going to see appraisals continue to be balanced. I don't think we have any major issues on our side.
Are you seeing any sort of drop off in purchase applications? Your company as a whole, you individually, so the intensity is still there.
I have been slammed.
Right.
Yeah. And I'm actually having more of my FHA buyers are getting their offers accepted again. You know, there was a short period of time where it was like, well, if it's not conventional, we're not taking it. I see some sellers are a little bit more accepting of our government loans, VA loans, FHA loans are getting accepted again. So maybe some of the conventional buyers are easing up a little bit, but my government loans are getting offers accepted again, which is nice because they're not bad loans. And I don't know where the stigma came from that it's not a good loan. But I have some great buyers that are FHA and VA, and they want to use those benefits and those loan types because it's the better product for them. It's actually easier to get them approved that way sometimes than it is conventional if they have a good credit score and, you know, a small down payment than a conventional loan that if the seller insists on accepting only a conventional offer might be a more difficult approval because they don't have a big down payment or their credit is just so.
Yeah.
So that's nice to see again too, because everybody deserves to be able to buy a house.
Yeah, no, that's a good point. And I think that's important for people to know that an FHA or a VA is not necessarily a bad loan. So what are the main reasons why they have a stigma? Let's just pull that apart real quick with the last 2 minutes that we have. Like in general, why do they push back on it?
The feedback that I have gotten is the appraisal. They're worried about the FHA inspection.
Right.
portion of the appraisal. But if the home doesn't have peeling paint and it's not missing, handrails, and it's a good home and it has good bones, that shouldn't be an issue.
Mhm.
That's like the biggest thing that I hear, is that they think that, there's going to be an issue with the inspection.
Well, the VA, I think, again, I'm not out there working with buyers and sellers at this point in my career, but I remember VA, the problem with the VA was they don't even allow more than just a few bucks to be put down on contract. Isn't that
They
the
can put
rub?
whatever they want down. They can put money down. I think with VA, and I think sellers, they get nervous when they see zero down. But zero down doesn't mean that they don't have the money to put down. It just means that they're choosing to use a benefit that they've earned.
Yeah. Yeah, but I
So-
mean, as an agent, and I'm sure Jen and Karen would echo this, I mean, that's fine. You want to do zero down, no problem. But if the appraisal doesn't come in, now we do have a problem. And secondly, they need to put some money down on contract to make sure that they're there through the finish line,
Oh, and they do
That's
that.
becomes
They
a
do that.
problem.
They can put the deposit, they can do the earnest money deposit on the contract, and then that would just come off of what their closing costs would be, because they still pay their closing costs out of pocket.
Right.
So that's not part of the mortgage.
But I think that's the rub, is that a lot of the people using the VA loan don't want to put much down on contract because they want to use as much as the loan as they can. And they're shooting themselves in the foot because they don't want to put $5,000 down on contract. They're trying to squeeze every penny out of the financing situation. I think that's what the vets need to know, is that, look, you can't, if you were a seller, you wouldn't want someone to be able to go all the way to the closing table and you have to move and do all the things that you need to do. And if they walk, you're left with nothing.
Right, they still need to put a
$0.
deposit down.
Like, that's
Correct.
crazy. You can't have
They
that
need some skin in the
situation.
game.
Yeah, like none of us would advise our seller to do that. It's like
Mhm.
it's unreasonable of a
Mhm.
request for a buyer to do that. And I think that's where a lot of VA loans get pushed away.
Yeah.
Okay. Jen, Karen, want to add anything real quick before we wrap it up here?
The market's strong, regardless, buying and selling. You just have to navigate it and really, really you have to go at it strong. There's no time to, be wishy-washy. You have to have a game plan and all your puzzle pieces together.
Yeah. And I think you need a really good realtor and a really good mortgage banker.
You
I don't
do.
think, more than ever, because it is so
Absolutely.
tricky. Yeah.
You took the words out of my mouth, Jeff. I think
Yeah.
now using an agent that's familiar with the market and knows how to negotiate and also has a good name with other realtors in the area is a key point to the listing agents. So that is really important, to work with the realtor that knows what they're doing and is known in the local market. Absolutely.
So on that note, let me show off the contact information for everybody that you heard from today. And, these are great people, top in their marketplaces, all three of them, Karen, Jen, and Jessica. Definitely get a hold of them. There's their contact information if you want to get a hold of them. And also we threw up, if you're interested in being a panelist on the housing market update, if you are a professional realtor or a mortgage banker or economist of some sort and you want to join us, check us out on Facebook, facebook.com/HMU update, and get connected with us and reach out. We'll consider it. All right. Thanks everybody for being here. We'll see you next month in July.